Jared, welcome. First of all, what kind of performance boost are we talking?
Hi, Kelly. It's good to be with you guys because the returns we saw, and we looked at data back since 1980, were pretty stunning. We saw that, on average, after a company announced a stock split, it tended to outperform the market. So average stock gained 25% 1 year after an announcement. That compares to a 9% average gain for the index as a whole. And those positive returns, that big outperformance, was true at just about any time where, that you looked at 3 months later, 6 months later, 1 year later.
25%? Let's show all the. This was in what time frame? I mean, that is huge outperformance. My understanding, I guess, was in the past that they tended to not really have much in effect. I was wrong.
Well, it is a big surprise. I think we're looking at data since the year 1980, and that includes some pretty incredible bull markets over that range. More recently, splits have become a little more scarce, which is why I think the story is so interesting today. You're starting to see a change, I think, in the management of some of these companies. Google is a great example. As returns get a bit more challenged, as tech stocks that maybe were performing incredibly well over the past couple decades suddenly see choppier, more volatile markets. Bob just mentioned, mega cap tech stocks down today, the same as the speculative names. Well, that might light a fire under some managements. It might encourage them to be a little bit more shareholder friendly. And when you think about the things that managements might do in coming quarters, whether it's dividends or buybacks or other corporate actions, there's nothing that's quite as free and easy as making your shares more accessible to more people. And that's why we think that you might see more stock splits come in the future. If that happens, if you do see managements get involved, there's incredible scope. We looked at a list of companies in the S&P 500 with prices above $500 a share. And today, that accounts for about $6.6 trillion in market cap. That's almost 20% of the total index market cap. So if this does become a wave, if companies do decide to be a bit more shareholder friendly, you might see some significant support as more investors are drawn into the market.